Stockpiling ahead of tariffs is likely to have hit economic growth in the US. Well, later today we get first quarter GDP data out of the US. It's forecast to grow at just 0.3%. In the previous quarter, it was up 2.4%. On top of all of this, consumer confidence is at a 5-year low and business sentiment has tanked. Well, Mabrouk Chetouane is head of global market strategy at Natixis Investment Managers. Mabrouk, this GDP print we get later today, how much weight do you think we should give it?
Well, this is, the first GDP print for 25 and the first GDP print for the U.S. New administration, the Trump administration. We do expect a slowdown in GDP growth rate, which is quite obvious for everyone because of different technical factors. But at the beginning of the year, we were pretty worried about the fact that we can see a recession in Q1. It will not be the case. GDP numbers will be positive, but definitely it will, show us that the US economy has started to slow down. Now, the question mark is, I think, in my opinion, and what is extremely important is how resilient is the internal demand, which was the key contributor of GDP growth rate and this exceptionalism in the US. So we do expect, all the components of this internal demand, private investment, private consumption, to decline, for the first quarter. And clearly, the front load effect that we have seen over the first quarter will also add another, drag to the GDP growth rate. So nothing, nothing worrying, regarding a GDP growth rate, but clearly something that could, that will signal a decline and a slowdown in GDP growth rate. It's not enough, to say we are about, to say US economy to collapse. Definitely not. But the market would be extremely sensitive to the components of this slowdown.
Mabrouk, we also get the Fed's preferred measure of inflation out later, the PCE index. What do you think we need to see to tempt the Fed into cutting rates next week?
Well, we all know that the Fed has a dual mandate with, inflation and the strength of the labor market. And of course, inflation could be a big deal for the Fed if we have, massive tariffs. But so far, we don't know. We don't know exactly where these tariffs will go for the US and for the rest of the world. In that context, in my opinion, the Fed will put more attention to the labor market. And we had last week, two chairmen for the regional Feds saying that if the Fed has to do something, it will be because of the labor market situation. So far, given the numbers that we have already, we do not expect any negative development on the labor market. So definitely, the Fed is not in a situation to cut their interest rates. There is no need to rush.
Mabrouk, let's go to Europe now. And German data this morning showed that the economy did grow in the first quarter of 2025, but only just. What's your assessment for Europe's biggest economy? Do you think a recession is inevitable later this year?
Well, the good news is that growth is, we have left in recession because last year Germany was in recession. And the good news for this quarter is we are, out of this situation of recession. But the number is quite weak. We cannot be happy with, a very weak growth. And the context is, we all know the context, the lack of visibility and so on and so forth. It is pretty complicated to see, the first impact of the fiscal measures that will be decided and implemented by the new chancellor. We have to wait a bit more. And the recession could be avoided for Germany if the new government decides to implement quite rapidly the fiscal budget and the fiscal package,
And Mabrouk, we also had data out of France today that showed that the economy rebounded, but only just. So what do you expect from its economy for the rest of the year?
Well, the outlook is not, spectacular. Is not spectacular for France again for this year. We have, these still political uncertainty in France with all these debates surrounding the budget. The lack of visibility is also affecting the French economy. And clearly, at the end of the day, we do not expect, again, a stellar performance in terms of GDP growth rate, which is another problem, another source of concern for, the budget for next year. So we are still in this, negative loop in France. And we need at some point, more clarification again on this tariff front. But the positive thing, if I may, the positive point is GDP growth rate at the European level plus 0.4%, which is, good news and means also that other countries are performing very well. We're thinking about Spain, for example, and Spain is now, the engine of the GDP growth rate in Europe.
And that was Mabrouk Chetouane from Natixis Investment Managers. And don't forget, you can watch more videos on Reuters.com.